All right, welcome everybody to another OkieTradez study session. So I want to talk about multi-day breakouts, and yeah, we got INDO here. We've got, you know, you can just look at it like this. This is what I prefer to look at it as. All right, this is the easiest way to look at it. The stock's not doing any volume. Doesn't have to be at all-time highs. All of a sudden, it gets a big spike with big volume. The next day, 2, 3, 4 days, whatever, doesn't matter. It's holding around the day one's high. That's the breakout level, specifically the multi-day breakout level. Because if you have a high set on an intraday, that's an intraday high breakout level, right? But not as significant as a multi-day, a multi-week, multi-month, multi-year breakout, right? So we have a stock that isn't trading much volume. All of a sudden, it gets volume and a big spike. It's holding up near day one's highs. And once it closes close enough to day one's highs, we know that it's going to have a high odds chance that it's going to break out that day. So this day right here, what is this? The high is 410. The next day it closes at 358. So a stock that is over 4, it needs to, or the breakout level's over 4, it needs to close within 10%. If it's under 4, then it can close within 20%. So the high here was 410, so it needs to close within 41 cents, right? 410, because 10% of $4.10 is 41 cents. Let's go. 4.1 minus 41. So it needed to close at 369, and it closed at where? 358. Okay. But if you look at this, it's also not an exact science. Look how close it was to closing within 10%. Sometimes when it's just right at 4, or say it's like 410, I'll give it like a 15% rule, like does it close within 15%? And this one definitely did for sure. But also notice this wick right here. This wick is longer than this one, which tells me, so when it pushed up to this level, day one's highs, there was a lot of resistance. And then it just sold off. But then people bought it back up big time for the close, right? And then it closed well off of its lows, and it closed within 10 cents away from being within 10% of the breakout level. So I knew that this day it had a really high odds chance of breaking out. So we just go to the intraday. So we got the breakout level right here, multi-day breakout level. But how I play them, I love to see. So see it like it spiked up into the close and had a little bit of a pull. This is an after hours pull, I believe, right? No, actually, okay. So it did pull right into the close, but spiked up, and then it kind of pulls in after hours, but then it starts to spike up in after hours, right? And again, where did it open at? Opened at 359, basically right where it closed. So I was happy with that. We know that this is the breakout level, right? It's the high of day one, the multi-day breakout level. Now, first thing I want you to notice is, it has a little bit of trouble right here. Maybe some early shorts are hitting it. Comes down, they hit this higher low or a lower high, comes down, doesn't crack, and then they all start having to cover, longs buy it over the breakout level. And then notice it pulls to the breakout level and bounces, 410 all the way up to 450. But this is how I play them. Whenever they open within 10% of the breakout level, if they're over 4 or within 20%, I know over first high of day, that I want to buy it, risking either last best dip or low of day, which is a judgment call. So this is clearly first high of day level. It spikes up. You don't know where high day is until it sets it. Once it pulled back to this candle right here and created a red candle, this is now high of day. It came up and tried to break high of day, and it didn't. See, the high is 373, topped out at 373. So it double topped at high of day. If it would have broke right here, it would have been a new high of day. Now, why wouldn't I buy it right there? Well, a high of day needs to be broke on the 4th minute or later, never on the 2nd or 3rd minute. So imagine this is the open, spikes up, one candle, and then the next candle is a red candle, and it's underneath it, right? There's the high day now. It comes up, now it's broken on the 3rd minute, can't buy it. It needs to break on the 4th minute. So let's just say it comes up, doesn't break right here, and it holds just under, and then on the 4th minute, opens up and breaks. I will buy it right there on that break, right? Or any time after that. So it spikes up, pulls back, creates a high of day, double tops at the high of day. Now we're just waiting for it to break high of day. Do we want to risk low of day or last best dip? So whenever last best dip is too close to low of day, that's whenever I risk low of day. If there is no last best dip, all we have is the low of day risk level. That's what I risk. Clearly, this last best dip is the best place to risk, because why would, like, if it slips under 360, you know, the odds of it holding low of day and then breaking highs again are very low, in my opinion, because that would be a very hard crack. And then, well, let's just say it did crack it and then holds up, and then like 20 minutes later resets up. Well, you got another opportunity to buy it. So again, you could risk down here if you wanted, but then your risk to reward isn't all that great, right? Because it's pretty far away from your entry. So the easiest entry is always first high of day buy, risking last best dip or low of day, which one's ever more clear. In this case, last best dip, right? Spikes up, and it doesn't spike too far. And you know you have your target. So let's look at the target, something I always will get to after I teach the entry. How do I find a target? Well, I look at the last best running day, and we say to ourselves, how far did it run? Well, on this day from the low, it ran from 235 to a high of 409. So let's just do the math there. 409 minus 235 means it can run $1.74 from its lows. So on this day, the low is what? The breakout day, 350. So we'll just add $1.74 plus 350 gets us a target of 524. Okay, well, it didn't quite hit 524 on that day. It went up to 465, but we have our target, right? So now let's go back to the 1-minute chart intraday. Of course, it deletes all my lines. Let's do it again. There's the breakout level. Okay, we zoom in. Our target is 525, which never gets hit, so we're not going to put the line, but let's just show you how I would play it, which I did play it, and I had so much size, I played it pretty bad. But we'll get into how I played it here in a minute. But this is how you should play it, or how I was taught to play it. I'll say it like that. So if you were to buy it right here, you have your target, but you don't just hold it to the target. When you get a parabolic candle, you sell some. So let's just say if it's an A plus chart, you want to sell it in fifths, versus maybe it's a C plus chart, you want to sell it in halves. So let's just say that this is an A plus chart. I would want to probably sell 1/5 right here because it spiked up with a big spike and doesn't seem like it can go anywhere, and it's starting to pull. Sell a piece there. Sideways action. I have my stop. We get another parabolic. I'm looking to sell another fifth right there. because it spikes and it starts to pull back, right? And then at that point, because it took 15 minutes or longer before, because when this low was set right here at 9:47, 57, right? That's 10 minutes, 11, 12. Well, it broke on the 13th. Close enough. Anyway, so I would move my stop up right there. So I've sold 2/5 and I move my stop up. I can't lose on it, right? We get this sideways action. You know, it spikes. It had a hard pull right here. So let's just say you could sell another fifth because it seems to stall out right underneath that breakout level. We still got 2/5 left, and it's holding this level, and then you get this huge parabolic, and then maybe you sell another piece, so that's 4/5 because of why? Big spike, and it's not pulling back right here. It's continuing to go up, so why would you sell it? But then it starts to pull. You sell another piece there, and then again, about 15 minutes it holds, and then breaks the high day. So now, because it's not just 15 minutes holds, you move your stop up. After it's held for 15 minutes a level, and then breaks the high day, and then you can move your stop up because it confirmed the risk level. So, at 10:03 to 10:10, there's 7 minutes, 8, 9 breaks on the 10th. So, I mean, it's close enough. 15 is just kind of a guideline that I use. So I'd move my stop up again, sell another piece. That's 4/5 of my shares. It holds, spikes up, starts to pull back. I'd sell the last fifth right there. See what I'm saying? Like, sure, you have a target, but like if it's really going to hit your target, it's going to get there all in like a couple of spikes. It's not going to take all day usually, although there are some times when it does that. But the point is, since it was an A plus trade, because it had high volume, it was a high um, conviction, like it spiked up, is really strong. And look at the candles, beautiful candles, good volume. The spread was tight. It was like 370 bids by 371 ask, beautiful, beautiful. Everything was great. And also, it's an oil kind of company, and we've been having the bombings in Israel the last couple of days, so it was kind of like a hot sector. So that's why definitely 100% was A plus. So that's why you would scale out in like fifths. Maybe you want to scale out in sevenths, tenths, who knows? But let's just say, for example, this was a C or a B minus trade, right? That's the breakout level, right? We're keeping that there. And it had some spread, so I took smaller size. Well, I'm probably not selling half here, right? I'm waiting for more like the second push, because I'm going to sell in half because it's like a or a C plus, B minus. Like I'm sketched out by the stock. You know, so, or maybe you do sell half right here. Let's just say you sell half right here, because that's probably what a newbie trader is going to do. I like to save my half if I'm selling it half for the second push, but maybe that's a bad idea actually. Who's to say when it sets up and you're moving your stop up? You can't re-add right there. You're moving your stop up. Just buy back the shares. But all right, I'm getting ahead of myself here. Forgive me. I shouldn't even be talking about that. The point I was trying to make is if it's a B minus trade, C plus, something like that, I sell half here, I'm holding, then I sell the other half at the breakout level. See what I'm saying? And sure, it went higher without me. I don't care. It was a B minus, C plus trade. I took my easy gains, blah, blah, blah. But all right, now let's just show you how I traded it, because I'm a little bit more advanced, right? And I am going to say that I whiffed it, but I still did. I'm amazing at entries. That's what I'm really good at. I'm not very good at selling. Scaling out in small pieces based off of A plus, B minus, that's really going to help me. And I just have to remember that I get caught up with, I see the money, I'm up 500, I'm up 600, stuff like that, where it's like I'm confusing my target. Like, so if I think it's an A plus trade, I'm like, well, I got to hold it to my target. No, I just need to scale out in smaller pieces into parabolic moves and move my stop. See, there's things that you just don't know until you don't know. And as you review, you see them. But let's get into my amazing entries here, right? Because they were. I have to admit that. I have to give that to myself. Because I cut myself down a lot. It's good that, like, I have amazing entries. So, wedge. This is how I bought it. I bought it literally over this high, risking this low. So, 368. I got filled at 370. And I was risking 360. So 10 cents risk. And it shoots straight up to 390. So 370 to 390 is 2 to 1. So I sold the whole thing right there. Which has been kind of my plan on these multi-day breakouts. A lot of times you get these first spikes and then they just fail. But the good ones, they hold up and they give you a re-entry. So, but I got 2 to 1 risk reward right there. I made 500 bucks. I bought 2,500 shares at 370 and sold it at 390 basically. 500 bucks. Then it set up again another wedge. And I took that, see how it 1, 2, 3 triple topped at 385. I bought it at, and I got filled at 386, an awesome fill. And I was risking 380, so 6 cents. And when it spiked up to, wait, what was it? This is how bad it was. It spiked up to 399, and then it pulled, and I got filled at 394. So 86 to 94 is 8 cents. So I got just a little bit over 1 to 1 risk reward when I should have got 2 to 1 risk reward easily. I had 3,000 shares. I bought a little bit more size there. And that's not even enough size. I'm just going to be honest with y'all. Like right here, when I'm risking 10 cents, I should have been at least buying 5,000 shares. Make 1,000. Come over here. I'm risking 6 cents. I need to be taking 20,000 shares, you know? So what is that? $4 we'll say. Let's do the math. Do I even have an account big enough to buy that? 6 cents, right? Times 20,000 is how much risk? 1,200. Yeah, I'm not doing that. So 500 divided by 6 cents. 8,000. Okay. So I should have had 8,000 shares. And we'll do 8,000 times the entry would have been 386. 30,000. Yes, I could have bought that. I had a big enough account to buy that. Okay. So then 8,000 shares from 386, and we're going to move to 412. I should have got filled at like 410. So 14 cents times 8,000. Should have made 1,100 on that one. Should have made 1,000. Should have been a $2,000 day. Instead, I only made roughly like 8 or 900 bucks altogether, I believe. Or I think it was 700 actually. Either way, was not very well thought out. Plus, I shouldn't have sold it all here. I should have, or maybe I should have sold it all here because that is my new rules for the 20 trades. Yes, 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 it is. On these multi-day breakouts, I'm to sell all my shares right here. And then if it resets up, now I need to scale out. Okay. I could sell, a third there or whatever. And then when it holds, sell another third up into this, pulls back, holds, and then it starts to pull. I still the last third right there. So let's just do the math on that. Let's just say I had 8,000 shares right here at 386. And I sold 1/3 at 410. So 8,000 divided by 3, 2,666, right? So we'll go 14 times 2,666, 373 bucks. And then we sell another piece up here at 435. So what's that? 435 minus 386. So 85. Oh, wait, I did the math wrong right off the bat anyways. Goodness gracious. Made more money than that. So 86 to 4 is 14 cents plus 10 cents is 24. So 0.24 times 2,666 shares equals $600, right? Okay. And then we got 34 cents time plus 14. So 0.48 times 2,666 shares, 1,200. And then we sell the last third because it spikes up right here and starts to pull. I guess we'll just sell it right there. So 450 plus 14 cents is 64.64 times 2,666. 1,700. So now we add these all together. So 1,700 plus 1,279 plus 639 equals 3,600 versus make 1,000 right here. Well, and then you have to add the 1,000 that I made right here. So 4,600 versus 8,000 times the original, just 24 cents. 1,900 plus 2,900. So I made an extra, what is that? $1,600 just by scaling out. And I'm able to move my stops up. So right by here, I move my stops up, whatever, which one, move my stop up again. So that's kind of the way that I got a little bit more advanced with it. So my goal on this one is to, for sure, if I'm buying right here on that first trade, at least until I get my next 20, like if they all start to string together, right? Like if I buy here enough times and they just keep holding up, well, I'm going to not sell all my shares here. I'm only going to sell half, you know. But I think more often than not, it's going to fail right after this on some of these. And then, I'll be glad I sold all my shares. Or it's going to pull so darn far, like say, like I sell half or all of it right here, and it pulls all the way back down to my stop, but holds. And it takes all day to reset back up, and I can rebuy it lower. You see what I'm saying? So selling it all right here for right now to me is the best move. But then the next one, if I say, I got to remember to myself, is this A plus or B minus? Like, what is it? If it's A plus on my second entry, it's super confirmed now. Like, I got a second entry. I've made money on the first one. I got a clear second one. It's holding up above or at my first sell, right? It's not too far away from my first entry. Those things need to be true. I got to take a lot of size here, and then I got to scale a lot smaller because I know I have a target, right? I know my target is 520s. Does it get to 520s? No. But I know to scale out. Instead of scaling out in halves or thirds, I'm scaling out in fifths, sevenths, or tenths because it's so darn A plus. And it also depends on how the market is too, right? The market's been sucking. Well, an A plus, you might scale out in thirds. If the market's been hot, then you need to scale out in tenths on an A plus. So, one last thing I wanted to show you about this awesome chart, which gave me conviction on it to make it A plus. Check this out. Multiple things. Multi-day breakout level right here worked awesome. Multi-day level breakout right here didn't really work the first time, but it didn't quite fail. It still held and then broke out. Awesome move. But the real thing that I want to talk about was, look at this. Beautiful daily chart wedge, right? And the multi-day breakout level was just right at that wedge spot, which why it sprung. Now, this can, if whenever it closes close enough to this 489, this would be a multi-month breakout level. So let's just say It like goes sideways over here for a couple of days. Then one day it has a pushing up green candle right here, and it closes just underneath, right? This level. Well, the next day I know it's most likely going to break this level, and I want to get in on that first high of day entry, right? And then boom, my target could be something like this day, $3, and it ran to 6. So I could say that on this day it could run $3 a share. So what was that be? Like 5 to 8, and that would mean it would break this multi-year breakout level. See what I'm saying? So really, really awesome strategy session on this one today. It had the hot market with the bombings in Israel. It had the multi-day right here, the day 3 surge level, multi-day breakout. It had the multi-month, and now it's got the multi-year. We got to see how the target was formed, how to play it on the intraday, whether or not you scale out in thirds or tenths based on it is an A plus or a C plus trade. And yeah, so really, really awesome study session here, and really, really key going forward that I don't even give a crap about intraday stuff until the hot market comes back. I'm just focusing on this. Like, I don't know about y'all, but why do I need to have gray hairs and make or lose 100, 200 in a day on intraday scanner stuff when I can trade these daily chart patterns, which may only come around 2, 3 times a week, but I have high conviction. The odds are a lot more in my favor, and I can take a lot bigger size because of the conviction. And hey, I may not trade for a couple days, but then boom, I make 2, 3 thousand. And I don't know about you, but 2, 3 thousand in one trade is all you need for the whole week, really. And imagine if you caught 2 or 3 of them in a week. That's $10,000 week, right? Or if you're just starting out, it's $1,000 week. And you got to go live life because you're doing whatever the heck you want instead of just looking at a screen all day. This chart, check this out. This is the last point I want to make here. This isn't 2020 market, right? I don't think this is the type of market where you need to be hanging around in front of your screen all day long. Look where this trade happened. The entry. What time? 9:42 Eastern. So 8:42. The market had only been open 12 minutes, and I'm buying it right there. Like, once I saw this pullback, I can just set a stop limit order. I don't have to be watching the stock. I know that I'm risking it right there. Or I can just be watching it, right? And this is what I did. I watched it, bought it, sold it, and then I went off to work. And then I saw it set up because I kept a little bit of an eye on while I'm at work. Bought it again, sold it, right? Easy peasy. But the best way to do it is you buy it, you have your target, and you set alerts. So like at 4 you set an alert, right? And then you see the alert hit at 4, goes off on your phone while you're at work. You're like, oh crap, all right, let's just sell half or a third, whatever. You sell that, and then you set your next alert at 450 because these whole and $half amounts, right? Because your target's 5. Hits 450, you pull out your phone, you look at it, and you say, oh, all right, well, what's it going to do here? It has a hard crack off of 450, spikes back up, then you just sell your other half, whatever, right there. You just made a great trade while at work. You don't need to be glued in front of your screens. It's something I have to focus on myself. Less is more. Why did we get into the game in the first place, right? So we could spend more time doing what we want. And eventually what happens is you have to fall in love with trading, and you end up loving trading and you want to trade all day. That's not the way to do it. In my opinion, right now, the best trades are the boring ones. An early trade, and you get out, you move on with your day, and you go live life. So, long study session, but very important psychological and technical study session here. Definitely give this one a watch 4 or 5 times. All right, take it easy, y'all.